ever show any results. So taking this ahead, may I request Dhuita to introduce Hrushikesh ji because he has to leave at 3:30. I'm grateful to Munish ji to leave this session for him. And thereafter, we will hear Munish ji. But before that, Hrushikesh ji, thank you so much for all your patience through the meetings. I hope you have met all my promoters. I'm grateful to you for your patience. And your session, please. Please, the stage is yours. Thank you, Dhuita.
It's okay, I'll introduce myself. So hi, is it?
Mike.
Hello. I mean, I can go without one. So hi guys. Look, how many of you have heard of Aadhaar? Right? How many of you have heard of UPI? I'm sure everyone's using UPI in this room. How many of you have heard of account aggregator? See, fewer. So what I'm doing here, now I'm going to ask you how many of you have heard of ONDC, and I'm sure the hands will be even less. But we are the fourth generation of a public good, and I'll explain a little bit. See, like we're constrained for time, so I'll explain a little bit about why we exist, how we can help, and especially I see students in the classroom that when you graduate, if you want to be an entrepreneur, how we can help you on your journey, right? So, look, India has been a storied experience, with ID and Aadhaar, payments in UPI. For those of you who don't know, account aggregator is modeled on UPI, but how you are able to transfer money with your debit card, PIN, and a telephone number. With account aggregator, you can transfer your data. So it's your bank statements, investment data, so on. It is not as mainstream. It is picking up. The lender in the room obviously knew about this, but I think in the next 5 or 7 years, you will be using this as often as you use UPI. But this is what happens with our public goods. Like, they creep in the background, and then suddenly one fine day they arrive, and you expect them to be part of normal life and work seamlessly, right? So the first question is, even before what is ONDC, like why do we exist, right? So if you look around the world, it's not only in India, if you see in technology, big tech has largely taken over most spaces, right? So if you see food delivery, in India it's Zomato, Swiggy. In shopping, it's Amazon, Flipkart. It's similar in Western countries. In even financial services, you hear about a few like maybe Paisa Bazaar, Bank Bazaar, Policy Bazaar, Insurance Dekho. In investing, it's Grow, maybe Zerodha. So what happens is in big tech, they tend to consolidate. Now, when big tech consolidates, they now know what sells, right, when they're distributing. When they sell, they put pressure on the sellers. So, in the case of financial services, the sellers are anyway large, so they're not so much under the pump. But particularly for small sellers, right, there's very large margin that gets taken away. So, you'll hear the Swiggy, Zomato guys complain that, or at least the restaurants who sell there, that the platform takes away 50% of what they charge. It's similar with Amazon, Flipkart, and then what happens is, look, we are not opposed. Obviously, people have to make money to make their platforms grow. But the second order effect, right, is these platforms don't share customer names with the restaurants or the customer preferences. So then you all heard of Snack and all these products that Zomato, Swiggy decided to come up with. That is their version of backward integration. You start as a distributor, then you become a platform, and then you become the manufacturer. And the promise to the restaurants was always that we will never come into your space. But now I've discovered what people sell, and now I will start manufacturing the same thing, so capture more and more of the value chain, right? And look, again, we're not opposed. This is business, this is life, and this is the way it works. But what Western countries did, they have antitrust laws. Europe tried to regulate this away. Our approach to this is how do we create a playing field which is more level for smaller players to be able to compete. So we are not saying we'll have antitrust regulation or try to have government bodies deal with this or snip the wings of folks. We said, okay, how can we just get more people to compete? So how do we decide to do that? Like we said, we'd unbundle the marketplace. And look, I'm going to talk about 5 or 7 minutes about the concept. I'll also tell you what hasn't worked, what's worked, what hasn't worked, and what we're going to do to fix it, right? So basically today, We operate in food delivery, in mobility, in fashion, financial services, and logistics, right? So very simply, if you want to try this out, you can go to maybe like an Ola app or a Paytm app, and you can actually now order pizza from there, right, off the ONDC rails. And how do we do that? We have unbundled the marketplace. So if you take a Swiggy or an Amazon, they onboard sellers, then they advertise, get customers, and then the customers order, and that's how it goes. The marketplace starts working. What we did is separated it out. So there are companies now that only onboard inventory, right? So you could technically go and onboard, say, pizza sellers in this area. It could be Domino's, the Rediwala, Smoking Joe's, whatever it is. Now as Paytm, they started as a payment app. Now if they wanted to get into food delivery, they just plug into the ONDC ecosystem. The customer can search for pizza in this pin code. They will be shown options. They'll also be shown options for logistics, right? Like currently we have only one or two, but in the future the idea is you pick a Blue Dot versus picking, I don't know, Dunzo or whatever. I mean, Dunzo's closed, but say WeFast, right? You can choose the cost, and then once you place the order, the merchant knows now that someone wants pizza, so they make it. The logistics guy goes, picks it up, and delivers it to the customer who ordered it, say, maybe in this room. Now, that's how it's supposed to work. So the one side just focuses on acquiring customers, one side just focuses on acquiring sellers, so that tomorrow, anyone with customers actually can do any business, right? You can get into food delivery, you can get into fashion, you can deliver financial services, and I'll talk a little bit about each one. But so it started working, right? We have about 18 million orders now a month. Mobility is the largest because that's what we had started with, then followed by food delivery, then retail. And now financial services as of May this year has picked up. Like I think last month we did about 30 crores of loans. Mutual funds we've done, again last month about 3-4 crores of sales. Now that is also almost doubled and it's not even the middle of the month. So it's beginning to kick off. So the idea of ONDC is like tomorrow, even if you're a startup, right, and you want to distribute, say, you want to create the next Grow or the next Paisa Bazaar or the next super app, right? You could go, like you wanted to create a banking app, like say a Google Pay. You can go get a TPAP license, you can come to ONDC, get credit to distribute, get mutual funds to distribute, and get insurance to distribute. So you can technically create a bank in someone's hand in one year, where previously that would take like a 300 crores of paid up capital and to do all the other things, right? Alternatively, you could start a food delivery business, right? So you could build an app and customize it for your local needs and start that. Like, well, in tier 1 cities now you have the big players. The issue is what do you do in tier 2 and tier 3 cities? Now the bigger play, right? Think about like a masala seller sitting in Satara district. Can a housewife in Delhi have access to her product, right? So that is the things, those are the things we're trying to power. Or like buying a South Indian sari. Can someone sitting in Mumbai place an order for a South Indian sari? Because otherwise what happens is these small sellers are restricted by geography. And what happens is startups are restricted by the ability to have the millions or billions of dollars you need to be able to onboard all this inventory. Or tomorrow you wanted to start a lending marketplace. You go and try to get an HDFC bank to engage with you as a startup, they're just not going to do that. But now with us in the middle, they will, because we have already onboarded them, and if you come to ONDC, you have access to their inventory. Now, whilst it's worked, it's working suboptimally, to be very honest. So we are like a startup in all senses as well. So we also have a hypothesis. We ship a product, then we see what works, what doesn't work, and then we iterate till it starts working, right? So on the retail side, we noticed a few problems. So one is cataloging for smaller, less tech-savvy folks tends to be very difficult. So we need to use, actually, this is the first proper use of AI, right? Like, so if I have a picture of a cushion or a picture of a bag, AI can clean up the image, do a nice description of the image, which, a relatively uneducated small seller in a village may not be able to do. The second issue is discovery, right? Like, I can't solve for the marketing problem or marketing money of a buyer app, but the issue is being able to actually show it, and like have it promoted. So Initially, our hypothesis was lower commissions would work, but what we found is as long as we are able to move the product of the person, so say it's 100 rupees, instead of charging, say, 40% commission, which is 40 bucks, say you charge 20 bucks. Now the issue is then to market a relatively unknown product. It's very difficult to do with less money as opposed to marketing a known product with more money. So we said, what difference if the commissions are even 100%, as long as the product moves and the seller is getting their price? Because in an open architecture, it's not like Amazon or Flipkart, right? If there's 100% margin to make, more people will come in and start distributing the product, right? So that is the second learning that we had. The third learning is someone has to control the flow of money in the disputes. So our hypothesis that the distribution app will do it. What we found is that they don't. So they sit on the money, they collect, they sit on the money as working capital, because technically they are owed commission of 10 to 15%, but they sit on the whole 100% and fund their own working capital, which is not a good thing because sellers are then not enthused to sell their product if they're not getting paid on time, right? And disputes is the other thing. You need a central arbiter of disputes, which is like actually Amazon is a shopping platform and you feel safe because if something goes wrong, you as a buyer know who you can reach out to. So tomorrow ONDC will become that platform of platforms, right? So we've gone from open networks, so now the thinking is we'll sit in the middle of the platforms and arbitrate disputes. So it's also cheaper then for the platforms participating who all don't have to set up their own call centers, all of them don't have to manage the money, we'll do that for them. Credit and mutual funds have started working really well in an open network philosophy. We also realized that we need central infrastructure because we can provide additional services. Now, for at least the lender in the room, the LSP audit is the main thing, right? Because otherwise, we already have 20 distribution apps live. So each lender would have to do an audit, 20 times, which is actually not sustainable tomorrow when it becomes 100 or 200 distributors. So we are going to take on that. We're going to build central infra where you have to whitelist only one place. So, and we will have a standard agreement. So one signature, you're on board, you whitelisted one piece of technology and you're good to distribute, right? So once we started with the open network philosophy, build something like the internet, we've realized you can't do it completely open. You need to have some element of control. And that's what we'll be laying out. So it's not like it's not working, but if you need it to work better, then you need to do these things. And we have even a precedence with this in UPI and account aggregator, where UPI was centralized and managed by NPCI, but account aggregator wasn't. So they've been around since 2016, but UPI is now at 10 billion transactions a month, and account aggregator still struggling with interoperability and those sort of issues. So look, I'm not going to drone on too long. Our goal generally is, if I had to sum up ONDC in 2 sentences, it's creating markets for sellers and choice for buyers. Because what happens today, if you look at your first page of Amazon or Flipkart, you get Amazon recommended, Flipkart recommended, Zomato recommended. Why does that happen? Because those guys, the deep pockets, are paying Amazon and Swiggy and Flipkart to show you whoever's willing to pay the most, right? You're paying advertising fees, you're paying listing fees, to show up on the first page or to show up, you can see the sponsored links and those sort of things. The idea is, can we surface more products so that you have more choice? You can filter on whatever criteria you want. So for example, even when you go to a loan marketplace, very often the product you are sold is by the distributor is where they're paid for the most commission, right? So it may not be the best product for you, but you're basically stuffed down your throat because that's where the distributor makes the most money. The idea is, can we surface the best products and can we provide you with the most choice? And then finally, our last imperative is to be low cost and to try to sachetize things as much as possible. Now, look, with physical goods, there's only so much you can do, right? Like, a good example was like Hindustan Lever and going from a liter or 500 ml bottle to 1 rupee sachets and embedding them in every Kirana store. Now, we may not be able to do that with physical goods, but we will do that with financial services, right? So the smallest loan so far, we had done a pilot experiment about 3 years back, was 160 rupees. Currently, it's about 5 or 10,000, 10,000 rupees, I think, that we gave the smallest one. But mutual funds, the smallest ticket size is 100 rupees. And Soon it'll be as low as 10 or 20 rupees. And why are we trying to do this, right? See, very simply, for you and me, like most people sitting in this room, people are calling you to take credit cards or selling you investment services or yeah, insurance le lo, whatever, but a vast majority of the population. So there's an 800 billion credit gap, I think, in the country. There's some World Bank report. Now, nobody knows exactly what it is, but it's a very, very large opportunity. There's like 3.5% of Indians have ever invested in the equity market. Like we're sitting in the seat of, the equity exchange of the country, but the reality is it's not permeated to the rest of the country. And with insurance, we're 4% premiums to GDP, where it's like basically most other countries are between 15 and 20, 25%. So the issue is affordability, right? Someone earning 15,000 rupees a month will not experiment with a 1,000 rupee, 5,000 rupee minimum ticket size. But if I can make it 20 rupees, they will try, right? And we've already seen evidence. So we have 20 distribution apps on mutual funds, of which 14 are first time. And one of the guys, right, he only markets to auto rickshaw drivers in Bangalore, right? So it's a great use case. The idea is to bring in new customers. We have another called Toddler that in UP and Bihar markets to parents who want to invest for the future of their children. So it's very first time, otherwise there are options of fixed deposits and chit funds and people are just getting poorer. Similar for credit, right? You can't even, what is the chicken egg issue? If I've never taken a loan, I don't have track record, so nobody gives me a loan. So the idea is, can I give a small loan, create some track record, then I get a slightly bigger one and so on, right? And it's similar with insurance. So today, I don't know, we must be buying anywhere between 15 and 50,000 rupees annual premium a year. Again, someone earning 15,000 rupees just can't afford this. So the idea is, can you do limited coverage premiums at 1,000 rupees a year, 500 rupees a year, where they get only, we get all these coverages that most of the time we don't even know what we're covered for, right? But all products are built currently for the affluent or wealthy. The idea is, can you build products for the poor? Now, what has happened is, all the companies realize that the markets are getting saturated in the tier 1 metro cities and like, so what can you do for tier 2, tier 3 and rural populations, right? So that is our effort. Hopefully 5 or 6 years from now, more people will raise their hand when you hear, someone asks you, have you heard of ONDC? Because, we expect things to scale. We are already beginning to see it grow. And at least for the students in the room, I mean, I already spoke to some of you where we could partner to do various things, whether, they're technology providers or actually manufacturers of the product. If you want to build a business, right, I can give you examples. There's a company called Clinic 360. There were basically 3 guys who had graduated from IIT Mumbai, wanted to build a credit distribution, insurance distribution app. They have, and they've gotten started. We helped them do that. And there are at least 5 or 10 other use cases. So, I mean, I would encourage you to look at our website, and tomorrow you want to reach out. Email addresses are up on the website as well. And I say this because, having felt the pain, and I mean, some of the entrepreneurs in the room, when you're small, nobody gives you a voice. We play that role, right, with the manufacturers and the distributors. So even on the flip side, if you're a small NBFC, there's a small NBFC called Aspire, we are connecting them with the big distributors like the Tata New app or Paisa Bazaar, because otherwise they just won't be entertained. So that is our role as a public good. Strangely, we're a not-for-profit, owned by the banks, and exist to make other people money, right? So we are also an experiment, a first of its kind in the world. Hopefully it works out favorably in the next 2-3 years. But like any startup, we are discovering what's wrong and fixing it. So I expect it to be a success. I've dedicated 5 years of my life to it, and I finally relieved to see it started working this year, and hope to see it scale in the next few. So I think I'm going to stop there. Happy to take any questions. Sure. There too.
Micro enterprises. So when I'm from my village, there are people who want to maybe start shop or
Right.
micro enterprises.
Yeah. So what we have in this unbundled framework is what we call a seller app, right? So think of the merchant side. So, ma'am, I forgot your name, but say she's Sumana. So she's a technology provider. she could build the merchant side app on ONDC Rails and actually go and onboard those entrepreneurs saying that you will get demand if you plug in. You just use this app, put your products over there. So we don't expect them to build the app. But, you know, like flip to say, the gentleman from Muthoot Finance, right? He'll have his own team of tech and he'll say, I'll integrate on my own. So I don't need to worry about the savvy guy. But what we need is for the micro guys, they need an app to be able to list on that someone helps them do it. So what we are seeing is, so I don't know if you've heard of Mandeshi Foundation, Chetna Sinha. So she's very active in this. There's also another one called Revive Foundation. So someone needs to explain a lot of it. You know, actually we have the technology. The issue is a cultural barrier in my opinion. The more I've spent in this space, more time I've spent, is people are afraid of the technology that, oh, how does this work? How are you able to give me a loan in 6 minutes? I'm investing money somewhere with someone I can't touch and see. And this is particularly true in Bihar and UP where Sahara like just breached everyone's trust over there. So they don't trust institutions, right?
Micro business, I'm talking about two things. One is customer credit that they give. If you know how villages work, it's about customer credit that they give out. And it's also about buying stuff for themselves, so working capital for themselves.
Yeah,
and these are small companies that, as you said, don't
they're
have
not even
credit.
companies, they're sole proprietors.
Sorry,
they won't be incorporated.
Correct.
So yeah, so like I'll tell you, there's another use case. So you have banking correspondent companies like Spice Money and Pay Nearby, which actually have transaction histories which lenders are willing to use to lend against. Again, in theory, this all works, but to actually put it in practice, we did it with the government e-marketplace where we were doing purchase order financing. We put it in practice, made it work. Just barely 25 crores of loans, I think, over 2 years, but it worked. And 6-minute or 10-minute delivery, money in the account, under 60,000 bucks. But putting this in play, right? You need, with all the priorities that everyone has, this is like a very edge of desk. So now that just unsecured loans have started working, now we've seen interest that we'll try this to see if there's even more lift. So you're right, there is an opportunity there. We are now a data-rich environment because a lot of people are transacting digitally, but we have not used that as effectively as we could now. So that is actually our job to make that happen. So, I mean, hopefully, maybe 3 years from now, if we have this again, I can come with a lot of data of how it's picked up or what, but yeah, that is the goal. There's a question.
Yes. So, two questions actually. One is, in this case, ONDC is not responsible for order fulfillment, correct?
It is not yet, but it is going to go in that direction where we will hold, see, how do you hold someone to account if I control the money? Because that's what the marketplaces do today. So hypothetically, if I had an escrow where the money came and sat, and if someone complained, I'll have to, one, create a chargeback mechanism for the buyer, and second, once the merchant proves that they've paid on time, then they get paid as per contract. Those are the two issues we need to face. How do I create trust with the buyer and the seller? You leave it to the market, nahi hota. The bigger player always abuses the smaller one.
And the second thing was